Hello, it is Thursday the 2nd of January. Happy New Year. I hope that 2025 brings you much health, wealth, happiness and fills your dreams. I'm going to start today looking at Bitcoin and Microstrategy, and then the big news today in a very kind of quiet, muted market open. The big news today is going to be Tesla sales numbers. And so we'll talk about them, and then a couple of the big altcoins, and then I will do a separate meme coin and kind of dinosaur coin update. Otherwise it becomes a really long video and nobody watches it, so don't want that. Let's start then with Bitcoin. So big picture, this is a weekly chart of Bitcoin. Here we are trading sideways in the sideways range that we kind of entered mid-November. Is this a topping pattern or just a sideways correction in a bigger continuing uptrend? So far we don't know. I have to say though that when we reach this 100,000 level, as I said before we had entered into the options expiration in November, we kind of had a situation where the dealers were all kind of long gamma around 100,000, which meant that this was a pretty tough resistance level. And so we had kind of a bound that I thought we would stay in December between 90 and 100,000 from this option expiration. We kind of did that. Then we broke out mid-December above this 100,000 level, but quickly we got back in this range, and this is where we've been another, sideways in that 90 to $100,000 range. So, any way you look at it, this $100,000 level is important resistance. If we are building potentially a bigger topping pattern, that's where we would look for. For me today, as we look at where we are, this daily 50 moving average is always really tough support and resistance. And the first time back to it, even if we are going to keep going higher from here, I would expect it to be tough resistance. So as we head into the open, it may be that we have seen the kind of most of the today's move. We've had pretty strong moves in other markets this morning, in the FTSE and in the DAX, but it hasn't all been positive. In Asian markets, Japan and the Hang Seng have had pretty nasty, kind of rough, sideways, choppy, negative starts to the year. So it hasn't all been positive so far. One thing about US markets though is everybody is really optimistic about US markets going forward. So the only thing that's going to kind of reverse this is a really nasty down day in US indexes. Particularly now, if you're looking at MicroStrategy, now that, last month MicroStrategy became part of the NASDAQ index, which means that quite a lot of its flow is going to come from people who just buy the index or sell the index. And so it will be, if the NASDAQ has a down day, it will drag on MicroStrategy no matter what you think of Bitcoin and vice versa. So as we enter into the open here, this daily 50 moving average for me is pretty tough resistance in Bitcoin. Let's start with big picture though, where we are. I'm going to go out to the monthly chart. It's very easy when you look at this from the November 2022 low to say, gosh, have we had 5 waves up here? One thing I will say about crypto is that the fifth wave very often extends quite a long way, and the only kind of exception to that is if the third wave was literally ridiculous. But big picture on this monthly chart, I think that potentially we are in a fifth wave, and so at some point we are going to see a bigger pullback, but we are potentially just beginning, if this was wave 1 of 5, the start of a much bigger move to finish. When I go down to the weekly and I look at what we have done from the low, where we think we started wave 5 at around that 5th of August low, where pretty much everything made a low in 2024. I do think this is wave 1 up to the August high, wave 2, and what we have just done here is wave 3. So we're making a wave 4 before this wave 5 begins. One of the problems with this, the potential problems with this next swing higher, is because this wave 3 extended a long way. If you think about it, we basically went from 50,000 to 100,000. So this wave 3 was 100% gain. And when you do that, sometimes the wave 5 can be muted or not quite quite go so far or sometimes fail. Wave 5s do fail. So what we might see is a retest of the highs that only just tags above it or so on. One thing we can say is wave 5 and wave 1 have a relationship usually. So if the bottom that we made in December here is the low, then when wave 5 is equal to wave 1, we would retest the highs at 107. If we go 1.618 of wave 1, which is a very common relationship, then the next we'd be looking at 118,000 on the upside. If we go to 1272, very common relationship as well, 112, 111,500. So that's what I'm watching out for. I do think that this wave 3 that we are in is complete though, and the most common retrace of a wave 3, so when we say to ourselves, is this bottom in here, the most common retrace is back to the bottom of wave 4, which we have done, but quite often it's like a 38.2 or a 50% retrace of this bigger move, which would mean if we do one more push lower, the ideal place to be looking to buy in Bitcoin would be 87,000. For now though, we found really strong, for today, I do think today's move is complete, but if we push through that daily 50 moving average, then obviously we are continuing higher. If we don't and we see a nasty reversal here, and if we get a shakeout, sometimes you get a shakeout to start the year, and that can be quite bullish, because then especially if it's the first week, because the markets normally take like a week to calm down. I think a great buying opportunity would be a pullback to this 87,000 level. And as I said before, that also is also the same price area as the 236 fib retrace from the lows of the whole big monthly swing. So if I go out to, let's take this off, and we go all the way down here, you can see from the lows in 2022, that's also the 236 fib retrace. So I'm not necessarily 100% bullish here. I think we may have hit resistance on this bounce, and if we continue lower from here, then 86,500 to 87,000 is a really good place. I don't see this as a head and shoulders. I know some people do, but if this, when head and shoulders patterns targets fail, right, because we could say, oh, well, this is a head and shoulders, but when they fail, when the pattern fails, it's usually because we're just looking at an ABC. So this would be the first target of the ABC, and then a bigger one would be a bigger 50%, and or potentially all the way down to the daily 200 moving average, which is where you tend to kind of go if you lose it. So if we break down the sideways range that we've been in and the really good support around 90,000, 86,400, 86,500 is where I think that we come back to next in Bitcoin. Now I know that sounds pretty bearish when everybody's like, what the hell, look, we're rallying out of the gate. The most important thing when I went to a hedge fund, one thing I learned more than anything is, every month your kind of book resets. So, whatever you made last month doesn't matter because it's a new month and you have to do it again. And, you're only as good as your next trade. Your last trade doesn't matter. And it's even more so at the start of the year. And I think it's really dangerous to get go all in too soon and have a loss or a few losses in a row. It kind of puts you in a really kind of negative headspace to start the year. So I think it's much better to start quietly and carefully and let the good trades come to you rather than think that you have to pile in or you're going to miss it all. So yeah, I learned that lesson the hard way. I hope you don't have to. Okay, so this is where we are with Bitcoin then. I think that we are a little bit of a resistance and we are a little bit at a risk of a bigger move lower here. Let's take a look at where we are in Microstrategy because this chart is also saying to me that potentially we have got a little bit further to fall. When I look at this as a monthly candle and where the December candle closed, remember, in candlesticks, the midpoint of a big thrust move candle. The midpoint is 50% of the open close. So clearly this closed lower than that 50% mark. And we also had these really long upside tails. What we learned from Microstrategy, Microstrategy is really just a leverage bet on Bitcoin. Lots of people have asked me, do the new accounting rules, will the new accounting rules make any difference for Bitcoin? I have to say that no. I think most people who are trading Microstrategy don't really care about the balance sheet or the earnings per share. It's really a leveraged bet for Bitcoin for them. Now, will a big rally in Bitcoin like we've just had make a huge bullish difference to the earnings per share and the balance sheet of MicroStrategy? Yes, it will, but that's a leverage two-edged sword. It also means, that they basically have to mark to market now to Bitcoin price. So if Bitcoin does have a big decline in future, that will hit those balance, but the books for MicroStrategy. So for most people, I think it's a leveraged bet on Bitcoin, and they don't really care about the accounting rules. One thing I will say is that we have learned that works pretty well. When Bitcoin is going up, MicroStrategy massively outperformed 3-1, but we've really just had 2 months of, or at least 6 weeks of Bitcoin going sideways, where we really haven't given that much back in Bitcoin, but MicroStrategy has given back 20% in that period. So that's a good thing. So the MicroStrategy trade works really well when Bitcoin's going up. Let's put it this way. So when I look at this monthly reversal, when you get this is basically a bearish harami on the monthly, that usually means that we are likely to come back a little bit lower to previous support and resistance. And we can see that we did this in April last year. This was a bearish harami. We came back to the support and resistance of these previous months' open closes. If we were to do that here, that would put us back down to around this 250 area in terms of monthly here in MicroStrategy, monthly support levels. If I go down to the weekly, you can see that we are getting pretty close to filling this gap that we made in November 2024, and we're getting pretty close to the weekly 20 moving average, which gives us a kind of support range around 270, a little bit higher than that 250, this previous monthly zone that I talked about. If we look at this for an equal measured move targeted level, and I measure from this high to this low, and I project it from here, you can see actually that this equal measured move is a little bit lower at 240. And when you do these measured moves, and let's move it here to the, I should actually line it up a little bit better, like this. With these measured moves, you kind of want to see a reaction at the 61.8, which we got, which makes it really important to support and resistance, which means also that I would say that I'm wrong. We're not going to continue to this measured move if we close back above that 618 level, which is at 318. So 318 in this previous swing low, which lines up really well with this previous support and resistance, becomes the level that we need to regain if we are on our way higher and on our way up again in MicroStrategy. So 318.67 is the level that we need to regain in MicroStrategy to be on our way up again. And as long as that stays as resistance, we're looking towards continuing to fill this gap, and 240, 250. For me, ideally 240. I like these kind of textbook equal measured moves, but I'm a little bit picky like that. So that's where we are with MicroStrategy, but obviously if Bitcoin blows off the barn doors, MicroStrategy will follow it higher, and 318 will confirm, and that will pull us above. Then we will look for this to continue higher and back above these daily moving averages. So the big news today in legacy markets is going to be Tesla's sales numbers, which are due today. Wall Street, this is quite important because for 10 years MicroStrategy has never had a down year, and because the last 3 quarters of 2024 were negative or down, in order to avoid a down year, this is the number that we need to get to avoid that annual decline. Basically, so the market is looking at this pretty closely. BYD, the Chinese manufacturers, had really blowout December, putting it closer to, you know, beating Ford and Honda. But I do kind of see a decline. I don't know. I think that the car market in general is in trouble. I do think a lot of consumers are tapped out and don't have the money for new cars. And so this is not, you know, an argument about electric vehicles or not. But this will be pretty closely watched given everything else that's going on. In the pre-market, let's take a look at where we are in Tesla. Right. So just like so many markets, we have had a pretty interesting correction. Interestingly, this lines up pretty much with mid-December. So if we're making a very nice bullish, you know, kind of three-wave equal measured move in Tesla, then our target number is a little bit lower, because just like MicroStrategy, which we just looked at, we've broken this 61.8 number, which is at 420, and the equal measured move support in Tesla is down here at 392. So we can say clearly today that if we can regain 420 and hold above it, we've made a bullish reversal, in this correction that we began in the middle of December is over, and we're on our way to new highs. And I have a big round target of 500 for Tesla. But if we drop down, the next support is at 392, and underneath 392 it's 372. And let's talk about why. If we go out to the weekly chart, here we go. If we go out to the weekly chart, so just like a lot of markets, here's a lovely big three-wave correction. We made a low in January 2023. If this is our wave 1, this is a big wave 2, this is wave 3, then potentially, if we drop underneath this 236 fib, the wave 3 is complete, and the ideal pullback of this swing would be to the 38.2. But within this, I kind of think that this was a wave 1. I don't think that this is complete. I think this was our wave 1. This is a wave 2. We've done 1, 2, 3, 4, 5, and that we've still got another leg higher, and that would make sense. So basically, from that low that we made in 2024, I think the low was in April. So 1, 2, this is wave 3. We've just lost this 236, and the reaction at this 236 fib that we had, this retrace level at 414, makes me kind of confirm that I'm drawing this right here, which means that the pullback level lines up with that equal measured move in 370, and if we overshoot on these sales numbers, we come down to 334, which would be 50% of this swing, would be the bottom of this previous wave 4. So both of these are really two really good pullback levels for this uptrend, 370 and 334 in Tesla. No idea what the sales number is going to be, but if it's perceived as less than expected or negative, these are really two good trend support levels, I think, that we can look to buy against. And then of course, if this is 1, 2, 3, we've got another swing higher, then a bigger pullback, and then another leg higher. Like, this by no means is a top for Tesla. These are just the pullback levels that I'm looking at, and because we are underneath this 415 level, because on the daily we're underneath this 61.8 correction level, unless we regain it, this says to me, unfortunately, that this, I think, continues lower in Tesla. So 415, important support. Resistance above it, the bottom is in. And if not, we continue lower to 370 and 334 in Tesla. Okay, let's take a look at some other altcoins to see if we give us any clue, because as I said, I think that this was a bit of a tough resistance level for Bitcoin. Let's see if ETH and some of these other markets are confirming this as an important resistance level. This is a daily chart of Ethereum, and I'm just going to take everything off. So when I look at the high that we made in the middle of December and this drop, I don't think this is a complete correction because this happened all in one big swing. And in corrections, I like them to see them as three waves, but I also like to see in the middle of a three-wave correction. So let's tidy this up. Hold on. The reason I don't think this is complete is I like to see in the middle of a correction at least some kind of a B leg with three wave moves in it to say that this is it. And this wasn't. This was just one drop. And so I think that we see a three waves and then another drop lower. Now sometimes, you know, especially if you're in a wave 4, which I think this might be, you know, you can go all the way up and do it like this. And when I'm not sure, so when I look at a move like this and I'm not sure whether we're going to go all the way up to the highs of this range, are we establishing a range, or is this just going to be that 3-week wave correction and then another leg lower? I put my fib retraces levels on from this high to low. I look on lower time frames. Did we get a reaction at this 236 fib level, which we kind of did, and then I lean on the other levels. So if we look at it here, this 38.2 level and this 236 fib level are really good support and resistance. Let's make it darker so it's easier to see. And so we can say 3,483, basically 3,500 here in the middle is pretty strong resistance. If we get above it, we are likely to go to the 50% next at 3,601 in Ethereum. Let's put that back in the middle. There we go. And really this, if we don't, and then we stay here in the middle in this really nasty sideways range that we have basically been in year end. Really nasty, gritty, low liquidity, no trend moves. All of these moving averages are flat. And so for me, the level I'm watching, I think there's a really nice trade if we can get above this 3,483 level. Because I really like these measured move trades, I think this is our wave 1. Here's or A, here's our B leg, and so the next leg higher I actually think may take us, if we can break out to the 61.8, because it would line up better with an equal measured move. If I measure from this high to low and project it from here, that takes us up to this 61.8 level and 3,750 area. So at the moment, important resistance. This was where we got stuck on the 20th of December and on Christmas Day, trading in ETH and holding above 3,500, 3,720 next. But I still think that this is corrective and it owes us another leg lower. And so for me, it's kind of the higher we get, the better, the less nasty this next leg lower will be, or the less far it will fall because we're falling from a higher place. So for me, ETH, still nasty sideways price action and still unfortunately corrective. So I'm not convinced that the bottom was in and for a new leg higher. And pretty similarly, unfortunately, for Solana, if we go to the monthly and we take everything off here, we are a little bit sideways in these at these previous highs from 2021 in Solana here on the monthly, and this monthly candle, for the reasons I explained before, because we closed more than 50% down of the big rally month that we had in November following the election. It kind of puts us in a inside bar kind of sideways trading range, a bit like we did before, unfortunately, at the start of the year with this inside bar here, and then we traded within it, gosh, for 6 months. Let's hope that doesn't happen this time. So what does it mean then in terms of what we're looking for? Well, if we go down to the daily, unlike Ethereum, we did not in this one drop in one nasty drop. We could argue this is our first swing, a kind of flat correction, and this potentially could see us bottom here in Solana. The problem for me is the moving averages are kind of the wrong way around, which means until we get above them or get more than 50% up on this nasty drop, we are in for some choppy potential. Keep banging our head, having a pullback, kind of 2 step forward, 1 step back, you know, nasty price action. Again, when I'm not sure, I put my fib retrace levels on from this high to this low. and we go level to level to level, and just like the big picture looks like Bitcoin here in Solana, we're at the same place in terms of support and resistance levels, 209. We had a really strong, when I draw my fib retrace levels from the highs in November to the lows that we made here in December, we had a really good reaction at this 236 fib, so we can rely on these fib levels. Now 38.2 fib levels can be a bit messy, which means you can look above them and close back underneath. They're not sharp, whereas a 50% level, which is where our daily 50 moving average is really sharp. So ideally, I think that we continue higher to this 50% level, 219 in Solana. But for today, this move, we've kind of done our daily range, and for today, this may be done. I would expect a pullback here before we continue higher, or some sideways trading before we continue higher and can push above 209, and then the next upside target is 219, and then we see what happens there. If we get there, potentially what we've just seen is a kind of corrective move. So you can see already here at this 382 level, this may be it. I have to say, it's pretty, it doesn't have to go all the way up to that 50% level. And if we measure this first swing higher and we say this is our B leg, and potentially this was it at 209, 210 in Solana. So what would be really bearish and say that we've stopped going up in this bounce? Again, because it's an equal measure move, back underneath this 61.8 level, which is no surprise, 99.50. So basically holding back underneath 100 in Solana would say that this whole rally that we began on the 20th of December, this whole rally is complete, and we are in a much bigger retest of the lows, potentially, I think at least back to maybe 184 in Solana. So this becomes, or these back tests of these December highs become a really important support level that we really don't want to go back underneath if you're bullish, because it does mean that we are going to see a much bigger pullback. And so potentially this is our key support. Now one of these, we could look underneath this level, it could come back in fact to 196 here. Sorry, I keep saying 100, but it's 200. So I was looking, so 196, if we bounce from here and then close back above 199, that and these December highs, that would be pretty bullish. But if we continue and go straight underneath, I would say that underneath 196 is setting up a retest of the lows in Solana, and would count, if we look at this daily candlestick, if we reverse today and close back underneath this daily 20 moving average, this would be a pretty nasty look. We've done that before. We've had a big look above the 20 moving average and close back underneath. That would be pretty bearish. So these two levels, 299 and 296, really important support zone today if we pull back in Solana. So that's what I'm looking at, and the big ones, good luck. Again, it's still really low liquidity. I know people will be back at it in America, but for most of Europe and quite a lot of the world, this will still be a little bit of the holiday until the weekend. Tomorrow, of course, we have the non-farm payroll jobs numbers, and that will get a lot of attention, especially in low liquidity. So far, it's always looked like the jobs market is holding up, whereas anecdotally you hear that people just aren't hiring, the jobs aren't there. So eventually, if that's true, it will show up in the jobs numbers. So let's see. Good luck. Let me know if there's something you'd like